Welcome. Thank you for joining us today. We will start the Nikkei Forum. I am Ryushiro Kodaira, editorial writer for the Nikkei, and I would moderate the session. As a journalist, I have been covering capital markets both in Japan and abroad since late 1980s. I have written lots of articles and columns about the rise and fall of bubble economies, lost decades, financial crisis, and finally nowadays, the recovery of stock markets. I am so excited to participate in the webinar today. It is part of Nikkei's newly introduced webinar series titled Japan's New Era. Today's topic is, are companies really changing the market's view? We will discuss Japanese equities markets and assess Japan Inc., from various angles with prominent experts. Let me introduce today's panelists. Ms. Rie Nishihara, Chief Japan Equity Strategist, JP Morgan Securities Japan. Rie represents the view from sell side. How are you, Rie? From buy side, we have invited Mr. Alexander Hart. Alex is a product specialist, Sumitomo Mitsui DS Asset Management. Welcome, Alex.
Thank you, Kodaira-san. Hi, everybody. Looking forward to discussing today.
And also from buy side, Mr. Tsukasa Toki Kuni. Toki is a representative director and a president of his Investment Japan office. And it is my great pleasure to have Mr. Gideon Rackman, Chief Foreign Affairs Commentators of Financial Times. Welcome, Gideon.
Thank you. Thank you. Good to be with you.
Yeah. This is 1 hour webinar, and we will take a short break in the middle. We have already received hundreds of questions from registrants, and I will reflect these interests in the discussions. So let's start the discussions. Over the past 12 to 13 months, Japan's equity market has been among the top performers globally. As Nikkei Asia reported on February 22nd, the Nikkei 225 closed above its previous all-time high set in December 1989. Several factors explained this bull market. First is a Tokyo Stock Exchange initiative to push for listed companies to be more shareholder-friendly. And a second, Warren Buffett's surprise visit to Japan and expressed his plan to increase the investment in Japan. And a three, portfolio rebalance by global investors from China to Japan among the geopolitical risk. I wrote the column on the Nikkei Asia, which says that question remains whether the bull market will be sustainable or not. As we have seen in the past few days, the equity markets all over the world are rather volatile, and Japan is not an exception. So with this recognition in mind, I would like to ask the first question to all of you. It is about the observation on the reason why the Japanese markets and the companies have become highly appreciated since last March. What actually happened in Japan? Please share your view with us, Rie-san.
Thank you, Kodaira-san. Before I make my comment, I have to apologize. This voice, I lost my voice last Friday, hoping to recover until today, but the situation has not changed a lot. So I asked for the best microphone for me, but if there is any difficulty, please let me know. I'll stop. So returning to the point raised by Kodaira-san, I think there are 3 reasons why Japan equity outperformed in the past year. One is end of deflation. Second is Tokyo Stock Exchange's value up initiative. Third is the new NISA, the tax bracket system for individual investment. So first, the end of deflations. This end of deflation has become political theme last 1 year, market finally saw Japan is heading for the exit for lost decades. At the spring wage negotiation a year ago, corporate management guided 2.1% base wage hike, which is above the Bank of Japan's 2% inflation target. So this was the first time in more than 30 years. So market was excited about this. And second is Tokyo Stock Exchange value up initiatives. It was initially shared to the market end of January 23 and officially started at the end of March. First, because it is very unique initiatives, I heard a lot of voice from global investors that they do not believe it would work. But when they listen or see the actual example of Citizen AGC, they announced unprecedented shareholders' returns in February, March 23rd. Then markets started to think about the big upside potential because all corporate Japan's balance sheet has big excess capital. Third, new NISA. This is a tax bracket for individual investments, which was decided 2023. So market come to see the large number of private wealth, which is 2,100 trillion yen, which is 14 trillion yen USD. So 5%, 10% of this, if it's shifted to Japan equity market, this would be a very strong driver in terms of flow of funds. So those three reasons are supported Japan market outperformance. In addition, the business sentiment of investment appetite has been picked up because economy shifted to a world with positive inflation, positive interest rate. Also, yen depreciation happened. 2023 average dollar yen was 144, which is 10 yen weaker than the previous year. And situation, comparative advantage for Japan markets in terms of equity multiple. US is very high, but Japan's valuation were not high 1 year ago. And economy, when China has a unclearness in the outlook of economic recovery, but Japan economy was structurally improving. That's from me. Thank you.
Thank you very much. So Alex, what about your observations?
Sure. So I'd break this rally down into 3 phases. First of all, and this goes back to, I think, around 2022, in fact, it was really a relative macro story. So Japan, the outlook macro-wise, whereas the rest of the world was dealing with inflation, we saw quite a different story in Japan. We saw, still accommodative monetary policy, and this began to actually increase, I would say, trading volume in Japanese equities. And as a result of that, I think what we've been seeing is longer-term investors. And when I speak to some of our clients and prospects at the pension funds, the insurance type companies, the very long-term investors, the kind of cyclical upswing in earnings that we've seen as a result of essentially what is a global recovery in the economic environment has really provided a new opportunity to take a look at what is really driving earnings at Japanese companies. And so I think that is really where the similarities between this rally and previous rallies over the past couple of decades end. If we look at what has been happening over the past 10 years or so, operating margins in the non-financial sector are now back to actually the levels witnessed during the late 60s and 70s. So the very high growth period in Japan, around 7% or so. And so companies, investors, when they dig into the details behind the earnings, they're seeing that it's not just the weak yen that's driving earnings. Companies truly have begun to adapt, I would say, more globally normalized practices in terms of a shareholder return and thinking about, management of shareholder capital. They've downsized where appropriate. We've seen a lot of move towards more rational cost structures. I mean, there really have been a number of, I would say, very significant improvements. And now what Ria said as well about the moving out of the deflationary environment, I think there's also potential to further increase expected return going forward. So up until this year, we've seen companies really have been essentially, they've been making efficiency gains in their earnings. But going forward, we'll see reinvestment of some of the retained earnings that they have, productive capex, etc. And so I think that when I speak to investors are starting to price kind of a more normalized economic environment in Japan in terms of the inflationary outlook, and a very small change in, say, nominal GDP growth projections could result in quite a large re-rating, going forward. So we see more and more evidence of that, I think. And back to you, Kodaira-san.
Well, thank you very much for your argument from buy side. It is very important. So now, Toki, it's your turn.
Sure. Thank you, Kodaira-san. Rie and Alex have shared with us great insights into the market on a holistic basis, looking at the market as a whole. So I'd like to share with everybody a perspective by looking at the market on a sort of divided basis, looking at a group of stocks versus another group of stocks. Let me share with you a slide on the screen. This chart represents valuation spread between value stocks and growth stocks. You could see the dark blue line going ups and downs. This dark blue line represents the level of valuation spread. And when the line goes up, that means the value stocks are more attractive, i.e., the valuation of value stocks are lower than those of the growth stocks. And you could see the last 40 years, the lines have come up a little bit. And in the recent few years, it has come down slightly. But the level today, if you compare the level against those of the last 40 years, you could still see that the current level is almost pretty much the 40-year high. And what this means is that if you look at the market as a whole, you might find, oh, it's kind of fine to difficult cheap stocks, cheap relative to intrinsic value. But if you divide the market into several parts, you could actually find some good pockets of value. And the value stocks could be one of them. However, it's not to say that we, as Orbis Investments, pick stocks based on these sort of macro factors or stylistic factors. And we pick stocks on a bottom-up basis, but this is just an example of a perspective we could share with you.
Thank you very much. And I thank you all for the very deep insights from different perspectives. And based on these, I would like to go into the second question. It is about the resilience and sustainability of Japan's equity markets. As I said before, the current stock market in Japan and the world are rather volatile. So do you think the market, I mean the Japanese equity market in particular, will keep the upward trend? And if so, what is necessary? So first, Alex, please.
Sure. So we are constructive on Japanese equities. We actually think that, coming back to all-time highs, surpassing that is really, it could even be seen as kind of a starting point, I think, when we consider that we are exiting the deflationary environment and entering a moderately inflationary environment potentially going forward. And as I mentioned in the first part, we do see some expectations of that begin to being priced into names. Over the past 10 years, actually, Japanese companies have grown earnings very stably. If you look at on a CAGR basis, EPS growth has been around 12% a year. That's actually, higher than what we saw, for example, from the S&P 500, which many, investors are surprised to hear. And that all came, as I said, through efficiency gains. It came through downsizing, etc. So now we are seeing expectations begin to be priced in that I would say the interaction effect between the better corporate governance, so the treatment of shareholder capital, not as one's own capital. And interestingly, when I was studying Japanese, one of the words I always had trouble with was jiko-shihon, which means essentially one's own capital. And this is what actually companies and managers used to refer to shareholder capital as. So that's only an anecdotal kind of story, but I think it does in a way sum up what the attitude towards shareholder capital was in the deflationary era. And so going forward, with the pressure for a return from both, overcoming inflation at home, as well as more, stringent expectations from investors. So the shareholder structure in Japan has changed quite a lot over the past 10 years. We have the strategic shareholdings being sold down. Just recently, the non-life insurers, as well as real estate companies, are now starting to sell the shares. And so this really is a product of, I would say, better corporate governance. But the question is, what are they going to do with the proceeds? And the Tokyo Stock Exchange initiative, which began kind of last year, in the early phases of that, we have seen, I think, the reaction in the market and on the corporate side be more tilted towards, raising the payout ratio, talking about kind of quick wins in terms of quickly trying to deliver, increased disclosure, deliver a business plan as quickly as possible, and less about actual, results in terms of delivering a sustainably higher return on equity. So I think the question, whether the Nikkei can get to 50,000, 60,000, really hinges upon the idea that we need to see a sustainable improvement in the level of ROE. And at the moment, in the near term, the shareholder return story is certainly in the headlines. There have been some interesting stories, small caps tripling their dividend, quadrupling their dividend. But again, they're very quick wins, very, I would say, almost superficial things. So on the buy side, what we're looking at is really when companies announce their new mid and long-term plans, and we're coming into the season where we do see that in Japan at the moment, we're looking for whether there is a clear pathway to achieving the ROE targets and the ROIC targets set out through the core operations of the company. So it's really going to be a question of will we see a follow through in terms of the investment behind the kind of expectations that we're building up to some extent in the market at the moment. So to summarize, I think that we do see a very strong sign that there is strong appetite now from companies for capex, productive capex, even companies bringing back production to Japan as a function of the geopolitical environment. But we really need to see, I think, more of a sustainable trajectory in terms of a higher ROE going forward, and that's what we're particularly looking at in our fundamental bottom-up research.
Thank you very much. I'm very happy to hear the constructive argument from buy sides. Thank you very much. So Toki, let me hear your different analysis about the future of Japanese markets.
Sure. One of the brilliant changes I've seen recently is that given the inflation and given interest rate coming up, which Rie and Alex both mentioned, I believe that the stock pickers market has come back. And in a stock pickers market, what's important, the key to succeed, is to be selective. And in order to be selective, what we need to look at is basically a comparison between a value of a company and the price of a company. When the price of a company is much lower than the value of a company, this gap is going to be your investment return, basically. If we look back in the era of financial crisis, we've seen since then the interest rate has basically always come down, and lower interest rate represents benefits for long duration assets, including long duration stocks such as information technology, artificial intelligence. They've benefited from the lower interest rate because they are longer duration. But that era, I believe, is pretty much over. And given the stock pickers market has come back, the more you analyze the companies meticulously, the more you get rewarded. That's my take.
Thank you very much. So I would like to welcome the different view from sell side. Rei-san.
Thank you. Thank you. I think for sustainability of Japan equity markets growth in a short term, it is relatively easy. Policymakers and Japan corporates carry out what they say and what the market had expected in the past 1 year. One is end of deflation. So increase of real wage needs to be realized, which is now expected to be like mid-year to summer this year. And then followed by a recovery of private consumption. This will mean the full stop of, deflationary economy. I think that should bring the multiple even further from the current level. And also that at corporate level, corporate management needs to carry out their corporate plan to address value up plan, ROE improvement, and certainly increase of business investment. But in the longer term, I think Japan needs not only end of lost decades, but also they have to regain what they have lost in lost of decades by changes of economic system and changes of corporate behavior. System level, I think first semiconductor AI business area. Japan needs to, make the best of opportunity brought by friend shoring in new geopolitics. And second, more higher productivity in order to address diminishing demography. So business area such as digitalization, automations, the corporates as well as policymakers needs to make these business to the top level in the world. Actually, Japan has top level automation factory, robotics factory automations, business technology even now. Look at Kien's SMC. So to apply those top level technology into real economy. And third, globalization to address diminishing demography again, to incorporate growth from all over the world into Japan economy through Japan corporates are really necessary. Yesterday, JP Morgan published a report launching Japan Core 30 stocks. We believe these 30 stocks will drive growth of Japan economy, Japan corporates in coming 10 years through economic cycle. So this basket shows the hypothetical performance in the past 10 years, much higher than topics, of course, higher than Nikkei, higher than topics 30, and as high as S&P 500. So we believe such a handful of best Japan corporates will bring Japan markets long-term sustainable growth.
Thank you very much. And thank you very much for your encouraging view about the Japanese economy and Japanese companies. And I'm very happy to hear that lots of different arguments from many market participants. And next, we would appreciate the insights of the Japanese economy and market from a different angle by Mr. Gideon Rackman. Sorry to have kept you waiting, Gideon.
No problem.
With international politics playing a crucial role in capital markets analysis, especially in Asia and Japan. So could you share your perspective after hearing from our three markets experts. Do you have any feeling or insight about it?
Yeah, I mean, I think geopolitics is already pretty fundamental to what's happening to capital markets and flows of both portfolio and direct investment, and that Japan is very much at the center of that, because following the Russian invasion of Ukraine, I think that sort of marked the end of the assumption that underpinned a lot of globalization, which was that no matter what happened in international politics, you could really invest in almost any country in the world, with a few exceptions, maybe Iran, North Korea, that were really pariah states, but that political differences shouldn't stop you investing in growth companies in Russia or in China, because globalization was such a powerful force that you could still do that. But then I think when Russia invaded Ukraine and the West responded almost immediately with massive sanctions on Russia, and a lot of Western companies have had to pull out of Russia, liquidate their investments at a loss. Russian companies have had their assets frozen. Suddenly, people realized, oh my God, actually, geopolitical turbulence could mean that it's not just that your investments maybe lose 5–10%, you lose the whole investment. And where else could you see that? Well, obviously, China and Russia have announced a no limits friendship. China has a similar kind of territorial dispute over Taiwan and also the South China Sea, and indeed with Japan. So what if they were to do something similar to what Putin did, if they were to invade a neighboring country? These are scenarios that are talked about very openly. And so if you're an investor, you suddenly have to think, hang on, these investments that we thought were safe, not only safe, but maybe represented the future, the place of the emerging markets we had to be in, could actually be really dangerous. So people are beginning to either liquidate investments in China at the one extreme, or just say, we're not going to make fresh investments there. We need to hedge. We need to look, and we need to look at places that, if you're a Western investor, are going to be on the right side of the geopolitical divide. And Japan very much is on the right side of that political divide. You saw that in the past couple of weeks with Kishida's visit to Washington, the strengthening of the US-Japan Security Treaty. So I think as those geopolitical concerns come up the agenda, investors have to pay attention, and they are, which is why you're seeing Japan suddenly looking like a more attractive bet and China looking like a less attractive bet.
Well, thank you very, very much. And I think Rie, Toki, and Alex have lots of questions to ask to you, but that will be a Q&A session in the latter half of this webinar. But anyway, thank you very much for lots of different interesting and exciting arguments. I think we will need a time for digesting the ideas. So let's take a short break, around 2 minutes. So after the break, we will start the discussions from further analysis on what is happening in the global politics and economies. Thank you. Welcome back to the forum. we will start the second half of the session. To begin with, I would like to welcome the comment on global geopolitics from Gideon. It is an indispensable factor to investors' analysis on the capital market as well. Unfortunately, however, hearing the geopolitics are very few opportunities for us. So it is a wonderful opportunity today to have Chief Foreign Affairs Commentator of Financial Times. So Gideon, could you share with us your view on the world politics and its implication to world economies, particularly to Asia, including Japan? Recently, you have written a piece about Ukraine and Iran. So what's your insight on this point?
Well, I think that, first of all, it's been a pleasure being here in Japan because it's one of the more peaceful parts of the world at the moment. You know, I was based in London and we have a major war on our doorstep, the biggest war in Europe since 1945, which is what's happening in Russia and Ukraine. And I think, you know, if you're not sitting in Western Europe, it's possible to think, well, this is kind of a localized conflict, and it is. But nonetheless, people in the European Union are beginning to feel very, very apprehensive about it. And the closer you are to Russia, the more worried you are. So if you talk to the Eastern European members of the European Union, Poland, the Baltic states, they really genuinely believe that if Russia were to win this war in Ukraine, were to turn the tide to occupy Kiev, that then Putin might turn on Eastern Europe next, and that he is essentially trying to reverse what happened in 1989, when, if you remember, before the fall of the Berlin Wall and the collapse of the Soviet Empire, essentially Russia's sphere of influence went all the way to Berlin. And they lost that territory in 1989, and we thought they'd more or less accepted that. And they actually say they do still accept that, and that it's crazy to think that they have any aspirations to take over Eastern Europe. But actually, if you look at a lot of the Russian rhetoric beneath that, for example, just before the Ukraine war, when the Russians laid out their ambitions and what they wanted the West to do to avert the Ukraine war, they called for America to pull all of its troops out in the new NATO states, not just out of Ukraine, there were no American troops there, but out of Poland, Romania. And so those countries think, you know, that they are in danger, frankly. And as a result, you're seeing increases in defense spending right across Europe. But the interesting thing is that, you know, here in Tokyo, you're also seeing increases in defense spending. And if you talk to the Japanese decision makers, I've been very interested that they genuinely believe that Ukraine is not some conflict on the other side of the world that they can ignore, but that the Russian attack there sent a very dangerous signal to Asia, that they see the potential for China, if Russia were to win, to see that as evidence that the whole American-led order is crumbling, that America's allies are not safe anywhere, that it's not just that they're not safe in Europe, but that Japan itself, South Korea, would also come under pressure, and that the flashpoints would be Taiwan, the South China Sea, that if Putin wins in Europe, then Xi might believe that he can win in Asia. So you have two flashpoints there, one that's already on fire, if you like, in Europe, but a potential flashpoint in Asia. And then you mentioned the Middle East. Now, obviously, the Israel-Hamas conflict has sort of led to tragedies on both sides. You know, the initial one on October the 7th with 1,200 Israelis either slaughtered or taken hostage, and then the pretty savage Israeli retaliatory offensive in Gaza, which seems to have led to the death of 30,000 plus people, many of them civilians. So there's that individual tragedy, which incidentally is leading to a radicalization of politics in Europe and America with anti-Israeli protests. You can see that happening on American campuses right now. But if you look at the way that the strategists are thinking about it, they see this as part of a conflict, or potentially with Iran. And you saw Iran firing missiles towards Israel, and the US and European powers helping Israel to intercept those. And why are they doing that? Because I think they see Iran as what the Americans call part of an axis of adversaries. So Iran as being closely allied to Russia and to China. Russia, because Iran has been supplying Russia with drones, which they're using to attack Ukraine with. China, because China is the buyer of most of Iran's oil. And also, incidentally, a connection with North Korea, because North Korea is also supplying weapons to Russia. The Chinese have recently sent a very high official to Pyongyang. So the US and are talking about an axis of adversaries, these four countries that collectively are trying to sort of overturn the security order in Europe and in Asia through Xi, and in the Middle East through Iran, and working together. And that kind of logic is also being embraced by America's European and Asian allies. So I noticed that today my own country's Prime Minister, Rishi Sunak, announced an increase in the British defense budget to 2.5% of GDP, and specifically talked about an axis of authoritarians, these four countries. And I've been interested that in Tokyo too, they see some of the same dynamics working out.
I see. Well, I think three participants here in these discussions might have many things to ask to Gideon, not only on the topic he just mentioned, but also any other broader themes which could affect the investment strategy in Japan. So please do not hesitate to cast a question, since this is really a wonderful opportunity. Otherwise, I would ask first. What about Toki?
Yeah, thank you, Kodaira-san. Yeah, Gideon, you touched on the geopolitical risks being enhanced. And it was interesting to hear that you mentioned Japan as a relatively safe country. If I look at my investment career, I started it 21 years ago. Back then, I didn't actually take the geopolitical risks into account when I invested in stocks. But today, the world is completely different. How do you view Japan? How do you view the Japanese stocks from the perspective of being a relatively safe country vis-a-vis the rest of the world?
Well, I mean, I think that it's the rise of a sense of investment risk, particularly around China, sort of, as they say, cuts both ways for Japan. In some ways, it's advantageous, because I think we're talked about earlier, both portfolio and direct investors increasingly wary of investing in China, but still wanting exposure to Asia and saying, well, maybe Japan actually is the place to go. And it's interesting that you could almost map the 30 lost decade, the 3 lost decades of Japan onto the rise of China. They must happen at the same time, so that the bursting of the Japanese bubble happens at the end of the late 80s and early 90s, and that's just when China's rise begins. So you could argue that if China begins to become less attractive to foreign investors, maybe the cycle reverses and people come back to Japan. I think there is some of that happening. And equally, in more concrete terms, as the US in particular tries to take China out of strategic supply chains, you can see Japan becoming more of a kind of hub for that, particularly in semiconductors. You've seen the opening of the big 2 TSMC plants. One's already open, another one will open here. And I think that the Japanese government is quite consciously trying to make Japan part of this whole friendshoring phenomenon that Ria spoke about, so that they can say, look, Taiwan, South Korea, Japan, the US, parts of Europe, the Netherlands can become these new safe supply chains. India could be part of it too, that skirt around mainland China, particularly when it comes to the sensitive technological goods that the US is trying to keep away from China, because they may have military implications, or they may have transformative economic implications, and they no longer trust China to be part of that. So Japan might become really a critical part of the Asian part of that China-free supply chain. And I think that's, again, a positive story for Japan. But taking, a couple of further steps back, of course, a more threatening China in the end is not good news for Japan. because in the long run, it implies there could be a military conflict in this region, and that would be pretty disastrous for everyone, China, Taiwan, but also for Japan. You know, nobody wants another war, either because you get directly involved, but even if you don't get directly involved, the disruptions to supply chains, to economies, the disastrous effect on sentiment, if there were to be a conflict, would obviously be something that nobody wants. And equally, even if you like, even if we manage to avoid a war, but there's this sense of people preparing for conflict, that could be bad for Japanese firms that over the last 20, 30 years have, like Western firms, massively built up their presence in China and see China both as a huge potential market, but also as a production base. So that if you say to big Western companies, and I include Japan in that sort of global West, if you like, you're going to have to get out of the Chinese market, they will say, that's crazy. This is 20% of the world's population. Remains a major economy. You can't tell us that we can't, say, if we're a motor manufacturer, sell into China. If you're Volkswagen, for example, this is your biggest export market now, and to tell them to lose that is a big ask, perhaps an impossible one. And equally, as a production base, if you look at, say, a Japanese company like Nissan, they're looking to make EVs in China and export them to the world. And if economic or political tensions mean that suddenly Europe or the US say, well, we're not going to take EVs manufactured in China, well, that's not just a blow to Chinese companies, it's a blow to a Japanese firm that's set up in China. So it's much more complicated than saying China down is good for Japan. It may be good for Japan in certain respects that we've already talked about, but in other respects, it makes the world both more complicated and more dangerous.
Thank you very much. And China-free supply chain is a very important concept in terms of decision making in the investment into the equity. So do you have any other questions? What about Alex?
Yes, actually, you kind of segued into what I wanted to ask. There have been some, comments from market participants, as well as, we see when we talk to investors, that the real estate kind of, well, I'm not going to call it a bubble, but the kind of fading of the wealth effect in China and the implications on consumption there are quite similar in a way to what happened during the bursting of the Japanese bubble. I was wondering, Gideon, if you had any thoughts about those, potential parallels that are being drawn.
I mean, yeah, they are intriguing, aren't they? Because some of the, exuberance that you saw in Tokyo in the 1980s, and that was the kind of, the first time I came here was just as the bubble was ending, although people didn't know it was ending at the time. But you had this incredible sense of conspicuous consumption and everything going Japan's way, and the Japanese companies were buying all the kind of impressionist paintings in the world, and you sort of have that sense for a while in Shanghai and Hong Kong, as if you have a 30-year boom, that you get a lot of froth, and then the sense that people for a while think it's never going to come to an end, and they come up with stories as to why it will never come to an end, and then actually it does, and all the people who've overinvested get very exposed. And as you said, Alex, there was a very, very strong property element to it in both Japan and China. And property bubbles, I mean, you're the investment professionals, but from what I understand, property bubbles, when they deflate, have a particularly kind of long-lasting effect, because they have an effect both on financial companies which have lent to property, but also to people's sense of their own wealth. So it also spills over into the consumer market, and people think, this is their single biggest asset, and suddenly it's worth much less, and they lose confidence. And I think you can see that certainly happening in China, because one of the reasons that one of the dilemmas I think the Chinese have is that everyone says to them, okay, you can't go for this investment-led, manufacturing, export-led sort of growth. You've got to have a consumer-led growth in future. But if consumers who poured their money into property are suddenly saying, oh my God, we've lost all this money that we put in, they're not going to be feeling very confident. And that wealth effect and loss of confidence can last for a very long time. So yes, I think there is definitely a parallel with what happened in Japan, but in some ways it's sort of worse in China, because Japan was already an upper income society by the time things began to go wrong. Whereas China is still, as they say, in the middle income trap. There are a lot of people who have not yet made it into the global middle class. And so in that sense, it's hit them earlier in their sort of wealth profile. And I think that that also China has the added problem that this geopolitical rivalry that we're talking about. I mean, we saw right at the end of the Japan bubble story that Japan was already hitting headwinds in Washington. People were sort of smashing Toshiba televisions on the lawn of Congress, et cetera, because there was real anxiety that Japan might maybe even be hostile to America. But that was always kind of a nonsense story. Japan was an ally of the United States, was not a geopolitical threat to America, whereas China very much is, and there's more reality to that story. So the Chinese, I think, have got some, as well as the property bubble, some added problems, which is the hostility of the United States based on a genuine geopolitical rivalry, and the fact that they, as I say, are hitting this wall earlier in their sort of economic development.
Well, thank you very, very much. Now, I think it is time to pick up a few questions from registrants. As I said, we have received hundreds of questions from registrants all over the world. And some of them have already mentioned in the discussions, but I find some questions unanswered yet. For example, many registrants would like to know the specific sectors or industries or business model, which might be further appreciated by global investors. So Toki, do you have any comment on this point?
Sure. Thank you, Kodaira-san. That's a good question. If you look at our portfolio, the Japan portfolio, we currently heavily actually invested in the sort of traditional Japanese manufacturers. That's probably counterintuitive to many people, because if you look at the current world, a lot of those artificial intelligence, information technology, those stocks are becoming really popular. And the traditional companies are probably not the most popular pocket of value stocks. The reason that we're invested in this area is that they actually have great growth, great quality, but being ignored by the market. One issue of being popular as a stock is that the price tends to be high. When the price is high relative to the value of the company, it's not a good investment. From my perspective, a good company doesn't necessarily represent a good investment. Those are two different things. And yeah, we are invested in these manufacturers and drugstores, which are probably not the most popular ones in the world, but we do see a great growth potential in these stocks. And actually, if you visit our website, you could see our top 10 holdings. It's publicly disclosed, and you might get surprised, but we're seeing a lot of great value in these stocks.
Thank you very much. And I quite agree with you that the good companies and a good investment are two different things, and a valuation is important. So what about Alex? Do you have any view on this point?
Yep, sure. So I kind of would tend to agree with what Toki-san said earlier in the presentation, that it's more than a stock market, it's likely to be a market of stocks going forward. So we see, larger dispersion between individual companies, even within the same sector. So you may see, one of the areas that, I think is interesting at the moment, and it goes back to the friendshoring theme actually, is Japan retains very, strong dominance in some areas of the upstream industries in terms of supplying the semiconductor value chain, as well as, some of the other manufacturing areas. Particularly the smaller companies, within that, that maybe they don't get the benefit from the inflows to the Nikkei 225, to the ETF, the passive type product. Some of them, I think the growth potential is not being fully priced. So I think certainly some smaller and mid-sized companies. And then on the flip side, I think that areas in financials are still quite interesting. We saw like securities companies, for example, have performed quite strongly coming into this year, but they still enjoy, I think, a lot of room for improvement in shareholder return, as well as an uptick in trading volumes in Japanese equities, and going forward, I would say a shift from savings to investment within the trading trends of individual investors here in Japan. And so maybe some of that is priced in the near term, but I think as a kind of long-term pick, a mixture between manufacturing and financials is what I'd be looking at the moment.
Thank you very much. So the other interest from registrant is about the rather macroeconomic things, about the influence of demography and aging on the competitiveness of Japanese economy. Unfortunately, Japan is one of the fastest country which grows, which becoming more aging. So what about your view, Rie-san? I would like to hear your comment on this point.
Diminishing population is the largest and most challenging issue for Japan economy. But I think there is a way for Japan to address it. In Japan, the working age population is currently 75 million, will be reduced by 25% by 2050. And government will understand it and initiated policies to address declining birth rate, but this impact will be apparent, impactful, it is only after 2040. So in the meantime, there are several things. One is to promote labor-saving technology, as I said, completely to seek a position of a model economy. Japan has technology, as I said before. And a second, open the country more to foreign workers. The government eased the requirement for foreigners to work in Japan, and recently the number of foreign workers are increasing. And currently, foreign workers consist 2 to 3% of whole labor force. But government aim or assume to bring up this percentage to 10% by 2050. This means Japan will keep on having 75 million labor force, no change from the current level. This is not what the global market assumes. So if government can really carry out this in a long-term perspective, I think Japan can conquer this diminishing demography issue. And third, of course, the most important part is Japan become an attractive country where we see a growing birth rate. So the DE and I is very critically important in this regard.
Thank you very much. And the third question from registrant is about the US-Japan relationship. And this is what I would like to ask to Gideon also, because relationship between US and Japan is really important in everything, from the geopolitics and investment. And actually yesterday, Aso-san visited New York to have the meeting with the President Trump, Mr. Trump. And in Japan, we have the argument to say that Moshitora, Moshi means if, and that means Moshitora means if Mr. Trump will be elected as a president this year. So Moshitora argument is really important in terms of the investment in decision making here in Japan. So I would like Gideon to make some comments about these issues. I mean, the Moshitora, or relationship between the US and Japan next year, if the new president will be elected.
Yeah, well, it's a big question, not just for Japan, but for the whole world. And I think that the Europeans are also very concerned about it, and perhaps have more reason to be concerned than Japan, because Trump has specifically raised questions about the future of NATO in a way that he hasn't about the US-Japan security treaty. Although perhaps, what he said was that NATO members that didn't pay 2% of their money into defense, the US would feel no obligation to defend them. Now that was a bit of a shock to Europeans. And I think maybe it's reflected in Japan's decision to say, well, we will actually aim to spend 2% of our GDP on defense by a couple of years' time. Maybe the Japanese can at least see the implication for them of those kinds of comments by Trump. I think the other thing that people will be concerned about is protectionism. Trump has talked about putting a 10% tariff across the board on all imports. Now, Trump says a lot of things, and one never's quite sure what to take seriously and what not to take seriously. And that's a third concern, if you like, that he's simply very unpredictable. And if you're an investor, you like predictability. You like to have a sense of where things are going. And Trump could really do more or less anything. But I think there's also a positive story you could tell, which is that actually in the first Trump presidency, Shinzo Abe handled Trump very well. Now he's not around anymore, but it at least illustrated that Japan can make its case to Donald Trump. And I think that also around Trump, there are a lot of very conservative people who are quite hostile to China and who will understand that if they're going to pursue a policy like that, they really need Japan. So although I think there are reasons to be pretty nervous about what Trump will do, not just to Japan, but to the world, and actually, frankly, to the United States in terms of seeking vengeance against his enemies and all that kind of thing. There are also some reasons from Trump's first term to think that some of these concerns can actually be managed, and that also Japan is in quite a strong position to make its case to the United States and to the kind of conservative United States that will come in if Trump wins.
Thank you very much. Oh, I am so sorry to say, but our time is now being up. And I hope today's webinar is the opportunity for all of us to check the reality if the Japanese companies are really changing. And we hope we can say that a change of Japanese companies is real and irreversible. And to follow the further development in Japanese stocks and Japanese companies, please check Nikkei Asia newsletter that you receive on a daily basis. And archive of today's webinar will be available from tomorrow, April 25th. We will continue this Japan's New Era webinar series. So please take a few moments to complete a survey from QR code, which will appear on the screen after the webinar. Your voices are very much important to us for improving the quality of the webinar. And I thank you, panelists, and I thank you for the audience for your participation and cooperation. I'm really sorry to say that we'll now close the webinar. And goodbye, and see you again.